Portfolio Builder members, welcome to today's trade alert for Diamond level members. Today's headline is Let America's Top 8 Companies Pay You $3,600 a month for the rest of your life. That's the average profit our strategy has created by writing covered calls against the top held positions in America when you look at the SPY ETF and the QQQ ETF. And so what we end up with is shares of Microsoft, Apple, Facebook, Intel, Cisco, Comcast, Bank of America, and Wells Fargo. We have pulled out stocks trading over $1,000 to make this affordable for most Americans. The startup cost to build this portfolio is $150,000. This was launched on December 12th, right before the Christmas massacre. But because we write covered calls that protect our capital, it's seen very little drawdown and just slowly but surely generated profits of 10.78% in 5 months. And again, that's an average of $3,600 of income every month, just writing one covered call every Tuesday around noon Eastern. So let's take a look at today's trade alert and compare it really quick to the results of our basic membership. The basic program is sitting on a 6.9% return. It only trades the SPY ETF, and all the extra profits it generates gets stored in the TBT ETF. This strategy trades again on Monday, Wednesday, Friday because it takes advantage of covered calls that expire 3 times a week. And this is only available on the SPY. Now the catch is it does generate less income from the covered call for every $30,000 you invest to get started with this program. So whether you'd like to trade a single ETF with our basic product every Monday, Wednesday, Friday at noon Eastern, or you'd like to simplify your life and just trade once a week with our high yield covered call strategy, we have 2 options available for investors. Let's take a look at where the market is heading based on option data today. In this chart, we can see the S&P 500 has really been on a tear to the upside. In fact, many analysts are scratching their heads wondering how on earth the stock market has gone up so quickly for so long in 2019. In fact, this is the fastest rising stock market in all of history. And if we simply look at the option trading volume on the S&P 500, we can get a general idea of where the wealthiest investors are predicting the market will head from here in the next 10 days, in the next 30 days, and in the next 66 days. And when we look at the S&P 500, you can tell there's a heavy skew in the call options, betting that the market will go slightly up or trade flat from here and really for the next several months. The second highest traded ETF in the world is the Emerging Markets ETF, which is heavily connected to China and its top trading partners. If China is having a slowdown, and this could have an eventual drag on American companies, we want to know and be well aware of any potential pullbacks in the EEM ETF as a leading indicator potentially showing weakness in the global economy. And so if we do look at that trading volume, we can see that it is slightly skewed on the call option side, but in the money. So while the stock market's a little bullish on the SPY for the foreseeable future, it's slightly flat and slightly bearish for emerging markets. Now, in your trade alert email, you have detailed instructions and a copy of our spreadsheet to manage your own portfolio. But the first step is to purchase the following number of shares of each of these tickers. That's 300 shares of Microsoft, 100 shares of Apple, 100 shares of Facebook, 100 shares of Intel, 100 shares of Cisco, 200 shares of Comcast, 900 of Bank of America, and 500 of Wells Fargo. This costs approximately $150,000. And again, over the past 5 months, has averaged $3,600 a month of income, simply writing covered calls against these stocks. And most of the time, we've been relatively defensive, writing at the money or in the money covered calls protecting our capital and generating a consistent and safe income. And so if we look at Microsoft, this is one of the lower paying covered calls in this strategy because it mostly goes up over time. It rarely has pullbacks, and when it does, they're very muted compared to the rest of the market. And so if we look at this stock chart, it is absolutely beautiful, and it's quite clear now that Microsoft has a strong monopoly on its markets and continues to get its hands on growth markets, namely cloud computing at the moment. Now, in your trade alert email, you have the instructions to cover last week's, which you'll just do at market with a single click in your brokerage account. And now you have the new covered calls to write. So to summarize the entire set of trades before we go look at each chart individually, you would just go to this table, and you know the expiration date is 4/26. You know the strike price for each security. You'll take whatever credit they have at that time, and then you just write the number of contracts based on how many shares you own. So you get to write 3 covered calls against Microsoft, 1 against Apple, 1 against Facebook, 1 against Intel, 1 against Cisco, 2 against Comcast, 9 against Bank of America, and 5 against Wells Fargo. And this is a strategy we do every Tuesday over and over and over again to generate retirement income. Now, when we look at this data, it helps you get an idea of why we chose which strike. And it's based on where the smart money is flowing their cash right now. And rather than try to outsmart the market, we just go with the market, be the casino. So on the Microsoft, there's a clear skew of call option purchasing going on today and in the open interest. So we chose the 121 strike. And if you're interested in the news, here's some of the top news for Microsoft. But they're just a very straightforward company that just keeps growing and growing and growing. Now, Apple's a much more volatile company, and as many of you know, is Warren Buffett's #1 holding in Berkshire Hathaway, by far the largest position. The next 2 largest positions are in Bank of America and Wells Fargo. So if you do look at the S&P 500 and look at the SPY ETF, one of the biggest positions is Berkshire Hathaway. But if we look under the cover of what Berkshire Hathaway owns, right now it's 50% owning Apple, Bank of America, and Wells Fargo. And I will show you some of the crashes we've seen in Apple. Went up to 230, down to 150 during the Christmas massacre, and now back up to 200. And if we zoom out, you can see this stock over the course of time has gone from $5 up to 200 currently. Strike we chose on this is the 200 strike. We can see there is substantially more call option purchasing going on right now with very little put option. So we went right at the money for a very hefty yield on this covered call. Apple's big story right now is that they created a lot of new services to help increase their subscription revenue. They're also cutting costs in India and China to compete in 2 very large markets. And they're also one of the top buyback companies. So that's been probably one of the biggest catalysts for this stock. Facebook is up almost 50% this year with a huge rally. People are always scared about them getting regulated by the governments, and their profits continue to grow quarter after quarter. You can see its growth from 22 to 178 just since 2012. And once again, this is another company that has quite a monopoly with its Facebook and Instagram platforms. Current strike we chose was 175. There's a little more put option in this relative to its peers, so we played this one a little more defensively. When we write that in the money strike, that gives us protection against the downside, but we still make money if it goes up. And so Facebook always has scandals going on. That's something you definitely have to overlook, and why it only represents a small part of our total portfolio. Intel's the next stock in our portfolio, and you can see it has completely retraced its crash and is getting ready to break into new highs, which can be a very bullish sign for stocks. But do take a look at the 2000 crash, going from 75 down to 15 in the dot-com bubble. So definitely something we have to be aware of when we trade these high growth companies. This is another example of a little bit of action in the put options, so we decided to play this safe with the 56 strike. We still make money if it goes up, but if it goes flat for the next week or slightly down, we are completely protected and generate a great return. And the future for creating faster and faster processing chips is very bright, and that's why this is one of the top performing stocks in the stock market. Cisco is on fire, breaking new highs almost every other day. And this chart is just phenomenal, just going straight up from 30 to 57. Now, it is one of those mega crashers in the dot-com bubble. And you can see it did crash from 82 all the way down to 15. So, of course, anything that goes straight up can get addicting and make you a lot of money, but do you know how to protect yourself against the downside? And that's one thing we do very well in this program. Market's betting up on this one. We wrote the out of the money strike, or slightly above at 58, so we can enjoy profits on the underlying asset plus the covered call. And all the analysis is very bullish. Comcast is the next stock in our portfolio and has risen from $8.74 in 2010 up to $41 today. Didn't have nearly as violent a crash in the 08 or dot-com bubble as some of its peers. And there's a little bit of option interest in the put options expiring at our date, so I chose the 40/50. Again, that's in the money, so it covers us against a little downside. We still make money if the stock goes up. Bank of America, again, one of Warren Buffett's largest positions, the second largest position in his total portfolio. And this stock has been quite a volatile one, which gives it a huge covered call return. In the 08 crash, it did crash from 54 down to $5 and then was bailed out. Of course, they were heavily invested in the mortgage crisis. But since then has rallied from $5 to $30, and this bank is in much better shape than it has been in the past. Market's bullish on Bank of America, very bullish. We chose the $30 strike so we can earn some profits on the underlying asset plus capture a very nice covered call yield. And what the banks have been busy doing for the last 3 months is scaring everyone that their data was going to be really bad so they could beat it with earnings mostly this week and next week. So market's betting up on Bank of America. Wells Fargo is the third largest position of Warren Buffett's portfolio. It's had its share of scandals. In fact, the central bank's limiting how fast it can grow until it gets some compliance issues in. And again, buying fear is often a great strategy when investing in stocks. It is at 47.19 right now, but after the 08 crash, went all the way down to 12. So quite a run. It's already selling at a relative discount, and it is a great place to get in. And the market is bullish on Wells Fargo. So we have that 48 strike, which gives us a little profit on the underlying asset, but mostly on the covered call. So that's the wrap for our diamond level covered call strategy. Hope you guys are enjoying the program. We have a Q&A webinar every Tuesday, Thursday at 1 Eastern. And if you'd like to save money on your membership or learn more about our two programs, call Dean at 505-322-7515. He'd love to talk to you and see if we can't help you start generating retirement income.